All right. Well, good afternoon, everyone, and welcome to today's webinar. I'm Cheska Cordero from Insightful Accountant and your host for today. Now, before we actually start, I'd like to go ahead and ask our question of the day, just as everyone's coming in and settling down in front of their computers, phones, or tablets, what have you. Okay, so Robin, I know the holidays are really, really close now. And I know like everybody's like last minute shopping. So the question of the day is what are the top three kinds of gifts that you would love to get this Christmas?
So I'm actually just going to answer with one gift, and my staff
Okay.
already got that for me. So we last Saturday we had our holiday Christmas party, and Friday they put a mysterious appointment on my calendar. And I'm a big baseball fan, and so they had Orbit, which is the mascot of the Astros, come and wish me a Merry Christmas. So they had Orbit come. So that was probably my best Christmas present of
Oh
the
my
year.
gosh. Like they brought the actual mascot?
The actual mascot, like, I
Oh
was
wow.
actually on the phone with a client, and so he was running late, and so I took a client call because I didn't know, he was coming, and so he comes marching down the hall, bangs on my door, and then ends up, like, hanging up on my client, and now my staff had told them, "Hey, I'll let you take this call because we need to distract her, but you're probably gonna get hung up on." So yeah, Orbit hung up on my client, and then after Orbit left, I called them back, and they were laughing hysterically.
No,
But
that's so
um,
fun. Oh my gosh.
yeah, so we have a great video. They took a great video of him marching down the hall, banging on my door, and then hanging up on my client. So, but that was my best Christmas present, probably.
That
So,
is
because I'm a huge Astros
amazing.
fan.
Staff of the year, honestly. Like all
There
employees
you
of the
go.
year.
Yep.
All right. Well, it looks like we do have a bunch of people in already. Okay, so I'm going to go ahead and start again. Good afternoon, everyone, and welcome to today's webinar. I'm Cheska Cordero from Insightful Accountant and your host for today. Now, this webinar is all about sales tax tips for QuickBooks. We'll be joined by Robin Hall from VARC Solutions in this lively and informative discussion, where she will lay out common pitfalls of sales tax compliance for QB users and show you how you can avoid them. The Wayfair decision created new sales tax rules, but those rules can be complex and are frequently changing. States are looking for more ways to make up the revenue gap by auditing and collecting unreported taxes. Small businesses, in particular, are in the spotlight with their exponential growth of e commerce sales that often trigger new tax risks. Attention to some key points can keep your business in compliance. Now, I'll have Robin introduce herself in just a little bit after I cover a few of the housekeeping items. Now, CPE is being offered for this session, and you have to be in the session for at least 15 minutes, and you have to answer all three of the poll questions. If you have any questions for Robin, please enter them in the Q&A panel, and I want you guys to be specific. Don't just say, what did you mean by that? You really got to ask Robin, what did you mean by you had Orbit, the actual mascot, come into your office and put down the phone for on your client, right? Mainly because she might not get to your question right after you put it in there. It's really there to just give her context on what your question was. Now, we'll be sending you a copy of the slide deck and a link to the recording after the webinar. And it's also going to be up on our YouTube page within about 24 hours. If you want to go check it out over there, along with many other webinars that we've done in the past that might be of interest to you guys, I will also be putting the link to our YouTube channel right into our chat. And I will be rolling those links out and the copy of the slide deck throughout the webinar in case you might have missed it the first time I put it up there. And lastly, do not forget that Insightful Accountants 2024 Pro Advisor Awards applications and nominations are still ongoing. And what does it take for you to be a part of Insightful Accountants 2024 Pro Advisor Awards? All it takes is for you to participate. Now, there are two ways to participate. It's either being nominated by someone else or nominating yourself. Now, I'll also be putting that link into our chat for you guys to check out. And with that, Robin, that's it for me. Welcome and thanks for being here.
Well, thanks for having me today. I know late here in December, right before Christmas, that's what everybody wants to talk about is sales tax. Um, so we'll dive right into it. So So just a little bit about me. So you mentioned the Insightful Accountant Top 100 Award. So since the inception of that, I have been on the top 100 and then in the top 10 twice for top writer trainer and the top niche practice. So I have been a pro advisor since 1999. I'm advanced certified. I've also been a solution provider. And then I think most notably on here in conjunction with this webinar is I do sit on the Avalara Sales Tax Advisory Council specifically for QuickBooks. So not any other product, but specifically for QuickBooks. So enough about me. Let's get started. I want to start with the first poll question. Okay, do you use sales tax within QuickBooks? Yes or no? And are you going to go ahead and close those polls? It looks like it closed. And so we had about 71% say that they use sales tax within QuickBooks and 29% say they do not. So let's dive in and look at QuickBooks a little bit. So I am showcasing screenshots from QuickBooks Desktop, but most everything that we're talking about we can equate to QuickBooks Online as well as some of the limitations. So 71% of you said that you do use sales tax within QuickBooks. So I'm going to burst your bubble a little bit and tell you it's not quite enough, but we're going to go into why. So in QuickBooks, specifically on the desktop, you have an option: is sales tax on or off, yes or no? Then you have options: do you pay sales tax monthly, quarterly, or annually? If you're in multiple states, you could pay sales tax monthly in one state and quarterly in another state and annually in another state. So QuickBooks really only gives you the option to say that your default frequency is one of those. The next thing is on items. You say something is taxable or it's non-taxable. So in many states, some things that are taxable in one state are not taxable in another state. And so just by having this binary choice of taxable versus non-taxable, you may not be taxing different things properly in different states. The other thing is under customers. Once you turn it on, then you have that customer marked as tax or non. But if you're using jobs inside QuickBooks, you have this sales tax tab, sales tax settings tab on the customers, but if you go into a job, you do not have that. So the jobs take on the life of the parent, but sometimes when you're doing jobs, especially if they're shipping different places, they may not have the same sales tax ability because they may be in different locations. You'll have to remember when you actually invoice that customer that you need to change the sales tax because it's not the same as the parent. That is a manual change that you will have to do. So let's kind of look at this again. We talked about the frequency. The selection is monthly, quarterly, or annual. If you have multiple states, it doesn't allow you to set a setting by state. Most common sales tax, you have to pick a selection. When a new customer is set up, then and they're outside of that default jurisdiction, you have to manually go in and change that. Also, when you're paying sales tax, you get that one selection. Sales tax report is pulled up, and you have to change it. Oh, well, Texas I pay quarterly, so I need to go in and adjust my report and to pay my sales tax. And Oklahoma is monthly, so then I need to go in and change that. As we talked about on jobs, you can't set that up on the customer itself. You have to remember to do that on the transaction. One other pitfall that we have in QuickBooks is there are some things that are taxable 80%. Are partially taxable. 80% is the most common one that I've come across. So like software in California is only taxable at 80%. So QuickBooks does not have a way to show this is partially taxable, and this needs to be done manually. So the other thing that you can do, because here in Texas, I am in Texas, and so Houston is the big metropolitan. So we're going to use that as an example. Um, our state tax, regardless of where you are in Texas, is 6.25, and then there's 2% that can be allocated to cities, counties, or special districts. So if we're going to use Houston as our example, there is 1% Houston city tax and 1% Houston MTA tax, which is a Metro Transit Authority. And so if I want to track so that I can remit to each one of those agencies properly, I have to set up different sales tax items. So Texas State is 6.25, Houston City is 1%, Houston MTA is 1%, and then I have to make a sales tax group and combine all three of those. What I've found is when people do that, they're doing the right thing, but somebody goes in and accidentally picks Houston at the 1% instead of the Houston group at the 8.25%. And so when you've done that and your customer pays you, you've shorted by 7.25. And so when you go to pay that, it's coming out of your pocket. So those are common mistakes that we've seen, and those can be costly to a customer. So if it was a $5 invoice, no big deal. If it was $1,000 invoice, a $10,000 invoice, those can be very costly mistakes. Locations. I'm going to give you some examples of this in just a minute and illustrate this. But just because you're in the same city does not mean it is taxed the same way in the same rates. And then everything that we love about QuickBooks and everything that we hate about QuickBooks. So I always tell people I love it about QuickBooks because I can go in and fix people's problems, but I hate it about QuickBooks because my clients can make more problems than faster than I can clean them up sometimes. So it is so easy to go in and adjust something in QuickBooks. And that is the best thing for me as a consultant because I can go and fix things and course. But sometimes, let's say we sent out an invoice and it was taxed, and I sent it out in March, and here we are in December. I'm cleaning up receivables. I find out that they should not have been taxed. The most common thing that users will do, because they're not looking at the step after them, the most common thing that the user will do was just go change that March invoice and make it non taxable now. So now my March filings are incorrect, and no one is of the wiser, and it's going to be very hard to go and find that one invoice that they did. That is the ultimate looking for a needle in a haystack. Actually, it's kind of like looking for that hay in the haystack. So it's almost harder to find, and so there's a lot of errors that people do just from not knowing what comes after that. Hi, I went through those pretty quickly, but I want to go ahead and run through a second poll question here. Okay. Do you think that sales tax module in QuickBooks is sufficient for your clients? Yes or no on that? All right, and the poll is closed. And so 13% of you said yes, you think it is sufficient, and 88% of you said no, it's not sufficient. Well, that's great news because now I'm going to go into what our solution is. So, since since a lot of you do use the sales tax module, but you also don't think it's sufficient, we're going to go into what we do need to do. How do we help our clients? So there's 5 steps that we're going to go through, and we're going to hit through each one of these. The first thing is we need to understand where we need to, the business, yours or your clients, need to collect and remit sales tax. So that's step one. The second step is once you understand, oh, I have nexus, and we'll go into the definition of nexus. I have nexus in the state of Texas. Now I need to register so that I am allowed to collect and remit sales tax. It is actually illegal to collect sales tax if you are not registered in that state. So do not prematurely collect sales tax. The third step is we need to calculate the correct sales tax to be able to charge on the invoice. So we need to know, is the customer taxable? Is the item taxable? Is it taxable at 100%? And then we need to calculate that tax and then pull it back on the invoice so that we can send our invoice out to our client. The fourth step that we need to do is track and manage exemptions. So there's more exemptions than just, oh, I'm going to resell this. They could be exempt for various reasons. They could be a direct pay where they are a business that pays directly to the state agency. So even though they are taxable and what you're selling them is taxable, they say they will assess that tax and remit it in. And as long as you have that piece of paper, then you're good to do that and not have to charge them tax. But we do need to track those exemptions so that that tax is not put on the invoice from the get-go. The fifth and final step is remitting the sales tax to the tax authority. So now that we know that we owe, we should collect the tax. We've registered, we collect the tax. We know if we should charge them tax based on their exempt status, and then we need to file the returns and pay the state the money. So those are the 5 steps, and we're going to kind of go through those steps now. So the first step is understanding where we need to collect tax. So that is just our fancy word for nexus. So nexus means a connection. So if I, the business, have a connection between a state, so it used to be a physical connection was the connections that we were looking at. Do I have a building? Do I have a warehouse? Do I have an employee in that state? If I do, I have what's called a physical nexus. About 5.5 years ago, economic nexus was born, and so now we have to look at economic nexus. And so do I have a connection in that state? Now with economic nexus, it becomes a little bit more difficult, and we're going to go into that, and I've got some slides of the United States and how that breaks down. But every state gets to make up its own rules. So it's not the same across every state. Some of them say, well, if you have so many transactions into my state, then you have nexus. Some of them say if you sell so much in dollars into my state, then you have nexus. Some of them, whether they're taxable dollars or not, you have nexus. Some of them are thresholds of $100,000. Some of them are $500,000, and various ones in between. We're going to go into that a little bit deeper, a couple slides in. Okay. Any questions on nexus before we move further from there? Watching chat, and I don't see anything. Okay. All right. So the next thing is we need to register and collect. We need to, when we establish that nexus, we need to go ahead and register with the state. As I said, it is illegal to collect sales tax and start charging sales tax in a state in which you have not registered. For those that are in multiple states, there is something called streamlined sales tax. And so instead of every state we getting a business license number and doing an application to these states, there is about half of the states that charge sales tax that are in a conglomeration where SST is, where streamlined sales tax is. And so it lets you do one application. You have one ID number with them. And if you're going through a service provider, and there's five or six in the United States, they will actually file your sales tax returns for free, and the calculation of those returns they will actually do for free. There is some rules around there. You can't have physical nexus. You can't have, but if you're only hitting it for economic nexus, then and you're in multiple states, then the SST program might be a great solution for you. All right. So the next thing is, and this is what I consider the day-to-day, down in the weeds, the calculation of the sales tax. So my recommendation is going with Avalara. They are the cleanest. They are the easiest one to set up. They're the easiest one to review and know what's going on so that I can digest. And if it's me working with my clients, I can explain it to my clients and I can teach them how to see what happens. So when we go and we have Avalara connected to our QuickBooks, it looks at a couple things. So it looks at, in the top right-hand corner, it looks at my ship to address. So that is where it's going to charge tax. So this is in Half Moon Bay, California. And so it's looking at that ship to address. It is also looking at the customer to see if I have exemptions on file. And then the third thing, it's also looking at the item codes. And in Avalara, we set them up and say, this is using this tax code, this is using this tax code. So those tax codes, California, it may be tax exempt. In Texas, it might be taxed. So it knows, Avalara knows, and it works with the government entities for the rates and the rules because they're ever changing. It knows if something changes on there, then it calculates that out, and the user is taken out of that calculation. When it does, and on the bottom, if you have AvaTax here on the bottom of the invoice, that is the green light to go out to Avalara. Please calculate my sales tax and bring that back. And then it puts it on the bottom line of the invoice so that you have it here. It does not write it down here at the bottom. It puts it on the body of the invoice so that you can have that. It does bring it back in one line. So earlier I was talking about Texas, and in Houston we have 3 different entities. There, it would not bring back 3 lines. It brings back 1 line, and the detailed breakdown is inside the Avalara software. Okay, let's talk about addresses. So my office is sitting in Friendswood, Texas, and I have an address that is also in Friendswood, Texas. You can see that one of them, they are both in the same city. They are in different counties. One has city tax, the other one does not have city tax. And so if I was going by and I said, what's the sales tax in Friendswood, I would probably be charging the 8.25. But there are some locations, like this, my office address, that is 6.75. Even though they are both Friendswood, they're very different tax entities. The only one that is the same is the state. And so if I'm remitting that out, I need to make sure that I'm remitting the correct tax to the state and to the counties and to the city. Okay? Any questions on that? There's some extreme examples as well. This is one that's right here in my backyard, literally. In Colorado, there is, I have an example of one that is, I don't have the picture here, but there is a 4% difference. One is 4.25 and one is 9.25, and they are on the same. So the Avalara does something that's called a rooftop calculation. And so it doesn't go by the just the zip code or just the city, because zip codes are for postal. So that is your postal area. That's who delivers your mail. It is not necessarily what actual city you are in. And I can tell you that from my office address there. Even though we are Friendswood Postal, we are about 50 yards outside the actual city. And that's why we just have the county and we don't have the city tax on there, because we are not actually in the city of Friendswood, but Friendswood does deliver our mail. Okay? All right. So the next thing is tracking exemptions. So as I talked about, there's all kinds of different exemptions. So you can have resale exemptions. You can have ones because people pay their own tax to the state. You can have a manufacturer's partial resale. And so in California, there's a manufacturer's resale exemption, and so it exempts about 80% of the sales tax. They still pay some sales tax, but it's about 80%. So tracking those can be time consuming and can be very daunting. I'll give you just a short little story about one of the sales tax audits I did for one of my clients. I will tell you the end result was a zero tax due, so that was good. But since they weren't finding anything, they were digging and digging and digging. And this company dealt with the chemical plants quite a bit, and those are doing direct pays. And so they pay the sales tax in themselves. So my client did not charge them sales tax. Everything was good. We can look on the state of Texas website and we can see that they are a direct pay filer. The auditor saw that. The auditor also said, I can see that they've been paying in sales tax, but my client did not have that piece of paper in their hot little hand from the client. They just took them on their word because also they saw it on the website. But the auditor said, and we went back and forth and said, unless you get that piece of paper from the client, I can actually charge you for those sales, and then we'll have to fight back and forth for those. So we were able to get that exemption certificate and then make that part of the audit go away. So depending on your auditor, sometimes they are sticklers, even though they say, no, I see that they are paying it directly. But the rules say that you have to have that piece of paper. So getting that piece of paper is very, very important. Okay. So earlier we talked a little bit about thresholds and QuickBooks, where I love QuickBooks. I've been a pro advisor since 1999. QuickBooks is, you know, everything that I do and everything I touch has QuickBooks involved in it. But there is some things that you can't quite get. So we talked about Nexus a little bit, and it's like, how do I know when I'm hitting Nexus? Running reports in QuickBooks to say how much do I have by state is a daunting task because you can free-form the addresses in any manner so that the city and the state and the zip code are not always in the city, state, and zip code field. So in Avalara, when you're pushing those transactions over, it's also calculating how much you've done in each state. The information it also has is it knows what the sales threshold is, whether it's a dollar amount or a transaction amount. And it also knows whether you're doing it for a trailing 12 months or whether you're doing it for a calendar year of 12 months. You can see in Colorado, it's looking at a calendar year. 2018, we did this. 2017, we did this. In Connecticut, it's looking for a rolling 12 months. So it's looking from October 17 to October 18. A little older slide, but still hits the point. So my yellow ones are, hey, I'm within 80% of my threshold, and so I probably need to get on the ball and start my business registration, and then I can be ready once I hit my nexus to move forward and start collecting and remitting sales tax in that state. My orange ones are, I have already hit my threshold, so I need to really get on it and get those filed for so that I can get in compliance. Okay, so we've hit the understanding where we need to collect, the register, calculating our tax, tracking our exemption certificates, and remitting sales tax to the tax authority. So, oops, go back real quick there. So one of the reasons that I also like, you can see these forms are going through pretty quickly here, but as you saw on there, most all of those forms are very different in how we need to file those. And so if we're with that compliance software, they will file those returns for us, make sure everything is filled out accurately, and remitting those on time for our behalf. So I've got one more polling question, and we're going to go through. And then I wanted to make sure I left some time for questions and answers. We can go into some of those a little bit deeper. So, are you comfortable with the sales tax conversation for you and your clients? We're going to go into this just a little bit after we answer this poll question. Okay, so the question is, are you comfortable with the sales tax conversation with you and your client? So 67% of you said yes, you're comfortable, and 33% said no, you're not comfortable. So I know that in the beginning we said that a lot of people are using QuickBooks, but you also, the majority of you, I think 88%, knew that QuickBooks was not enough. So if you're comfortable with the conversation and you're using QuickBooks, but you know QuickBooks is not enough, what's the missing piece? What can we help with? How can I help you with that conversation? And what's the hesitation of moving out of QuickBooks if we know it's not enough? Can we put some stuff into chat so that we can have this conversation? I would love to have this conversation to hear what's going on with some of those. Y'all aren't going to leave me all by myself with no questions, are you? There any questions in the chat? Maybe I'm not seeing those.
I'm not seeing any either, and it looks like attendees can chat with everyone. I have that set up. So guys, come on, get your questions in there.
Y'all got to give me one question. All to sleep. We were hoping with a little bit interaction on this part, guys. So we want to make sure that we're getting you questions and tips and tricks and mostly it's pitfalls of where QuickBooks is and does not help you so that you know what to look for if you're having clients do that, particularly back on customers and jobs and if you're in different locations and making sure that you're on the right spot. So I would like to help with some of the conversations that you guys are having with your clients. Anybody like to see any of that is the end of my slides. I do want to go over questions and answers, and if anybody would like to see, I can go into a live demo of what some of that looks inside Avalara. If that will be helpful for you guys, I can switch over to a live demo if that will be helpful. I'm Tesha, I'm not sure if we want to. Well, Christine, we were waiting to see. We were leaving some time open for questions, and if y'all wanted to see a live demo of it, so I'm just checking to see. So I have presented all of my slides, but I was leaving this open for conversation because a lot of this was how to talk to your clients. All right, let me go into here. All right, pull this up, and then we're going to use a customer and a job here, and we are just going to use hours, and this is a test transaction. So when we do this $5,000, and I'm going to do a lot of money there, I'm going to do it to Avatax, and then when I save this, it calculates my sales tax on there immediately. So I have the 5501.88. Let's look at how it goes into Avalara and the pitfalls that are the results that we have there, so that we can see that it's giving us the right results, so that I can explain back to my customer why I have that. And we're going to look at some of the pitfalls on here because this is one of the addresses here I have that is going out, and it's going to do sales and use tax. And so it is something that QuickBooks cannot do for us, or the user would sometimes just totally miss this. So we're going to go here. I'm pulling up my Avalara account real quick just so that you guys can see. So in here we have our Avalara account. I'm going to go into my transactions. And this is invoice 1110 that we just did. And here's my invoice 1110, 77888 or 75888. You can see at the end here I have 1110. I'm going to click into this, and I have no exemptions that were applied to this. I have 7588, and here is my tax. And then I have on here that it is Texas, and then it is Brazoria County. I showed you the 906 Anna earlier, that it is the Texas and the Brazoria County. But this address also has use tax. Remember, I told you we in Texas up to 8.25, and because all the tax wasn't used here, then the special district is allowed to add tax as long as they don't go above the 8.25. So if I was just doing this in QuickBooks and I just put the Friendswood and I picked the right one, I would probably just do the 6.5. But this one also has an additional 0.5% because I need to tax the special district on where it's going. So it's not just where it's coming from, the origin, but it is also sometimes there is destination tax. So this is one of the things that we have with QuickBooks, that we cannot have it calculate on there, or even for the user to know on there. We're going to do one more thing, and this is one thing we talked about exemptions. I can put on here, I'm going to go ahead and in here I have something where I can say, oh, that they're resale, so they're not taxable. So if I go back to this invoice, same invoice, I'm going to go in and I'm going to make a change here. So it's the same invoice, but I changed something in my QuickBooks that's going to talk to Avalara. I'm going to save this. I see it calculate there. It's going to calculate that at 0. So if I go back here to my Avalara so that I can see that, I'm going to back so that it refreshes. So now I see this is not taxable. So now I come in here because I've told them that it is exempt, and this has it changed my description on here, and then I have no tax here and I have no tax here. But I'll also be reporting this, that there was this amount of sales in this jurisdiction. Okay, so looking at how we can have QuickBooks work with another software to make sure. And so the pitfalls that we run into with either jobs or locations or addresses, or knowing what's taxable or adding additional use tax to something that QuickBooks can't do, we do have a solution there for it. Any questions that we have here? Anything else I can show you inside QuickBooks? I will show you here. My QuickBooks. If I go to the parent, I have my sales tax account here. If I go to a child or a job, I do not have that sales tax. So that's one of the things that we were talking about, where I don't have that ability to make that sales tax. And so now with an outside service that's connecting to it, I talk to this signal and then it knows to go out, and I'm looking at this job address versus my bill to address. And so my job address, my ship to address is where I am going to. Okay? And if we don't have any other questions, I appreciate you guys' time. And I hope this was helpful to you. And if there's anything that I can answer or questions that I can answer for you, I'm happy to do so.
All right, perfect. Well, Robin, I just want to stay a little bit longer just to see if anyone has a few last minute questions that they want to ask you that they didn't get to a minute ago. So, yeah, and if you guys just like think of questions right after the webinar, because I know that happens to myself sometimes, like, oh, I should have asked this. You have Robin's contact details right here, so that she could help you out when you need it. And do not forget that Insightful Accountants 2024 Pro Advisor Awards is still ongoing for nominations and applications. So I'll just send that right here so that you guys can see. All right.
I appreciate you having me and letting me talk about sales tax and QuickBooks. As I said, QuickBooks has been my whole existence since 1999, and as I love it, I do find some holes in there, and we find ways to fill those holes to make sure that our clients have everything that they need.
Yes, of course. Absolutely. So that's why I think this is amazing, and amazing that you were able to show that demo, honestly. Really helpful for everybody as well, just so they can have a kind of overview, so to speak, as to what they could probably do to fill those voids, to fill those kind of holes that they need to fill.
Absolutely.
All right. Any questions, anybody? Questions? I feel like they're hiding from a teacher. Like, when you were little, you used to not make eye contact. This is their way. This is your guys' way of doing that. All right.
Three
Okay,
of them
well,
left.
yeah. All right, guys. So I guess if we don't have any other questions, I think that's it for today.